Hey guys, so in this video we'll be looking at accounting break-even. Okay, so just reviewing that. You must have learned it in your previous classes, but anyway, let's review. So the example which we are going to look at is an example of Airbus, which is a plane manufacturing company. So let's say they come out with a new and a more efficient plane. Let's name it like the A42. Okay, so let's also assume that this plane has a 10-year lifespan. So once they start producing it, the plant will be available for like 10 years, and in 10 years later they might have to upgrade this plane or design a new plane. That's our assumption. So we are working with the 10-year lifespan. So what is break-even analysis in some sense, right? So break-even, whenever you talk about break-even analysis, you're trying to think about what is the level of sales or revenue, right? How much should you sell in order to break even? So that's your goal objective. So the goal over here is to find out what the sales amount is. So that's your goal. That's your target. You need to find that out. Okay, such that you break even. Okay, so let's get some more assumptions in. The variable costs are 55% of sales or revenue. There's a fixed cost of $4.5 billion. Let's think of all this fixed costs as like all the research and development which went into making this plane a lot more efficient and quieter and faster and so on. And let's also assume that the plant, which is the retooling of the factory, was around $1 billion, and so you're depreciating it for $100 million every year since it's your 10-year lifespan. We are assuming simple straight line depreciation, nothing over here. So here, whenever you want to try and think about break-even analysis, so break-even analysis occurs when net income is equal to zero. That's when you break even, right? So, but if you try and think about it in other ways, before net income, you have your earnings before interest and taxes. Let's forget interest for now. So you have earnings before taxes, and then you pay taxes, and that's how you get to net income, right? So earnings before taxes, like you subtract out interest and so on. So, but if your earnings before taxes are zero, your taxes also tend to be zero, and the net income is zero. So in reality, instead of net income, you could say earnings before taxes is the same as net income should be equivalent to zero. So once we have this condition, you could kind of solve for sales. So let the variable sales be X. Okay, so we're going to try and find out what this X is. Okay, so let's try and do, if that's X, then the variable cost is going to be 0.55X, and then you have the rest of the thing. So it will be X minus 0.55X minus $4.5 billion, or I'm going to write everything in millions of dollars. So it's going to be minus 4,500 minus 100 million in depreciation. Okay, so this is going to be, and this should be equivalent to zero. So once you subtract all that out, that'll be your earnings before taxes. So it's going to be 0.45x is equivalent to 4,600, or x should be equivalent to 4,600 divided by 0.45, and that will be, so it'll be 10.22. So 0.22. So that's how much $1 million you need to achieve in sales. Or in other words, you need to approximately achieve roughly 10.22 billion in sales. Okay, so that is the amount which you need to achieve in sales in order to break even, in order to have an earnings before taxes of zero. So let's say if there's an additional information such that like one plane, if your selling cost, if you're selling at roughly, let's say $55 million, right? Let's think about these as big planes. So one plane is selling at a retail price of $55 million on average. So the number of planes which you need to sell, now you could try and think about it as like the number of planes which you need to sell, that's going to be 10.22 or $10.22 billion divided by 55 million, which is going to be 0. Well, let's have everything in millions. Let's not confuse ourselves. 10,222.22 divided by 55, and that'll be the number of planes which you would need to sell. 10,222 divided by 55. Okay, so you need to approximately sell 185 planes in order to break even, or more than 185 planes, or roughly 186 planes, let's say. Okay. So 186 planes is what you need in order to break even. And that is your accounting break even.